I didn't. I used the figures we got in class last week.
You had to continue. The ones that we did in class was done. You had to continue with the remainder of the depreciation and any other adjustments which are necessary towards the end of the financial period. So that is what my question is all about. Did you get time to continue on your own with the other assets that are not depreciated or that were not depreciated? Did you find time or not? Because I need to get the figures now so that we complete the adjustments. Did you find time to continue or not?
I didn't.
Okay. Thank you for an honest opinion or answer. Now, that is where, if you're honest to yourself, is a very good step as the beginning or as the first step to rectify your situation or rectify the problem. Because if you do not accept that there was something wrong, you might not improve. So please, that's just something that in future, please, with your own individual situation, first of all, start with acknowledging that I did not do this. Then only you will find a solution then to do it or to find a way to improve and not fall behind again. Now, we'll just go through what I have, and then maybe some of you can still also add if you have done it, or else you can still add it if I leave it out now, because it was actually your part to go through all the workings which were left, and then we just record and complete the year-end adjustment. Because the most important thing that here what we are doing is just where I've already indicated that if it's a new asset, you must have the word new just to specify. If it's an old asset, then you will have to specify. Now, the asset that we have bought during the year, which is now office equipment, we never had it at the beginning of the period. So no need to maybe now specify whether that's now old or new, because that's the only office equipment that we have. If that makes sense, because let me just go to the trial balance. Now, if I go to my non-current assets, office equipment at cost. First of all, yes, first office equipment at cost. We bought this during the second period. Remember, when we're doing our customer supply documents, we had a machine that we purchased, and then that's the one asset that we are now about to depreciate. Now, the fact that I'm saying that it was not at the beginning of the period, so it means we acquired during the financial period. So and it's the only asset. So we don't have to specify whether that's now old or new when we are calculating our depreciation, because there wasn't any at the beginning. So office equipment, I said you must specify which non-current asset you are depreciating. Office equipment, and then you debit depreciation with the amount of, you take the cost, excluding VAT, that will be 5,500. And then you look at the policy, going back, because when you are going to purchase those non-current assets, you will fall back to your policy, which says that for all non-current assets, we use a straight line method, and then it's over a 5-year lifespan with a residual value of equal to 10% of cost. So that is where you're getting your method how to depreciate your assets. that you will be buying throughout or during the financial period, unless you're already told how you must do it. Or in other words, what I'm saying now is that in this case, we bought this asset during the second period, multi-function copy photocopier machine. Now, here there was no information about the policy, how to depreciate it. That's why then we are falling back to what was the policy mentioned at the beginning of the financial period. So it means it remained the same. Now, unlike maybe towards the end, when you're doing your year-end adjustments, you are told that we bought a new non-current assets, and then you need to look at whether there's another policy that they're using for that new non-current asset. If there is no policy, then you will revert back to the original policy that was communicated at the beginning of the period. But should you find another way that they're depreciating, for instance, this machine that they bought, now they're using maybe reducing balance method, then you must stick to what you're told towards the end of the financial year, because that's when the asset was bought, and then that's when now they come up with that policy for that specific asset. I hope the two situation is clear. Am I making sense here? Let me hear from you.
Yes, you are.
Yes, you are. Okay. I hope that's for all. Anyone else who's not clear, who wants me to repeat for the last time? Okay. Silence means that everyone is fine. So that is where now we need to take this amount. It is VAT inclusive, and we need to work back to get to the exclusive amount. And then we already saw that in the trial balance, that amount for the office equipment, it cost is 5,500. Now the 5,500 amount, you take your policy, how it should be depreciated to get to the figure. Can you get the figure quickly? Do you even have your calculator next to you? So you will get, you will take 5,500. You can even times that by 90% because less 10%, divided by 5. That is getting 990 depreciation charge per year. What is the next thing that you need to consider before you type that as being the amount?
Which month it was bought?
100% correct. You need to look at when was it bought. Now, according to our records here, it was bought on the 16th of the second month. The second month would have been December, because our first month for this year is November. So our second month is December. Then we need to depreciate this asset for how many months now? Since it was bought up until the end of the financial period, how many months will that be? Do you start in February or do you count as from March? How do you do it in financial accounting? So it will be from February or March. That's what I'm asking now.
Feb.
Is it from February that you're counting? Or is it from March?
From Feb, because that's when it was booked.
So if it was for the 20th of February, well, you count February.
Yes.
That's how you do it in financial accounting. If you bought the asset 28 February, so you will depreciate for that 1 month. You use it for that month. I don't think that will be. Come again?
We first calculate the months for March, and then the days which we used it for in Feb.
Okay, that is much. It makes more sense. Now, that is where maybe for computerized accounting, it will not be that. We will not count days, at least months. Because we are just saying that normally then the asset would be bought in February, like in this case, but then you will depreciate as from March going to the end of the next month. So maybe that is where for computerized accounting, it will be a bit different. The month that you bought, unless you bought on the 1st of that month, then you would have it for 30 days at least, or 29 days, depending on what that month has. Then that can be a month. If you bought it part ways, we will not calculate the days. It will be just calculating months. So just take note. If this asset like now is bought on the 16th, we'll just depreciate it as from 1st of March going onwards, no days. If it was bought the 1st of February, then you will depreciate from February, because at least then you will have the whole month for February. So just take note for computerized accounting. That's how we'll do it. We'll not go through depreciating day as when it was bought. No, not that too much work. In this case, since we bought it in February the 16th, we'll only depreciate from March going onwards. So March to October, that should be 10 months. So the amount that I'm getting is 825. That is where it will be different from rest accounting. We are not going to calculate days. We just work with months, just to make it easier. The accumulated account for office equipment, that's the account to credit. Moving on, we have got another asset that we also bought during the year, which was what? So for the first asset, which was bought in the second period, and then we moved on to another month, September. September, we also purchased other non-current assets, and it was in the form of furniture. We had an amount, office walls, furniture, that's one. And then here also, the shelves are also furniture and fittings, because you know that on the system, furniture and fittings is one account. So the shelves are fittings, and then, but on the system, it falls also under furniture. So if we look at our trial balance, we have posted both amounts on furniture and fitting at cost, the 5,000 and the 2,000, so that we have in total now 7,000 as furniture that needs to be depreciated. Now we will depreciate this, since we bought this in September, we will depreciate that in the next month, only for 1 month, which is now October. Because you see, even the last one, it was bought on the 28th, almost close to the end of the month. So we cannot depreciate for 1 day or 2 days. We are not going to do that for computerized accounting. We just go with months. Just understand this, please, and make sure that you adopt accordingly, because just for computerized accounting, that we just go with months. So these assets were bought in September. So we only had them for the full month, which is now October. So for October, it's only 1 month, and then you go through to the policy, because as you see, even in this cash book processing document, they did not tell you how will that asset be depreciated, just because then it means you will revert back to the original policy that we had at the beginning of the year. That is how then we will depreciate that asset or those assets. You will take the 7,000, then you'll get your divided by 5. Normally you'll get that the 7,000 less 10%, and then divided by 5, I get 1,260 charge per year, division charge for the year. But then, as I said, we need to take part of the year because we only had it for 1 month, which is now October. So if we take that only for 1 month, that will be 105. So that's the amount that we'll have to depreciate for furniture and fittings. So when we come to recording it, we have to specify that it's of depreciation, and then this is now furniture. Now the old and new will not be applicable because we also just did not have any furniture at the beginning of the period. Now we bought this during the year, so we only have 1 class of furnitures. The amount is 105. And then for the contra account, we need to look at the furniture and fitting accumulated depreciation account. So according to the documents that I have, I think that's the only assets that we have bought. And because all this that we have processed, we did update. So it's already part of our trial balance. But unless that we still have some of the assets that were bought at the end of the financial period when we're doing the year-end adjustments, those assets will not be reflected at this trial balance because we have not updated our general yet, or even our cash book yet. So if I go to my general, and I can remember that when I go to my adjustments, what we have bought during the year as non-current assets, it was this additional machinery. And I know that we have done all the recordings regarding this asset. And then, so it means we are done now adding all the assets, unless you can think of any other which is left out. Which asset was not accounted for? Now, what I was just saying now, also typically here, for this additional machinery, we bought this asset 1st of October. So it means that by 31st October, we will have it for a month. So we need to depreciate that asset for 1 month. I hope that is what we have done because we had it for that 1 month. I think depreciation new machinery, that should have been the amount that we did calculate already, yes. Now, another aspect apart from depreciation is any adjustments on accrued interest income or any accrued interest expenses that are from the financial instruments, either financial assets or liabilities. So what you normally need to do, what you can do is that you take the document, starting from the beginning of the year, you look at which accounts that you had at the opening balances, which investments accounts that you had, and which liability accounts that you had. So you need to take the percentage, and then you have that interest. We are not told in our recordings, either when we're doing our cash payments, that we have paid our interest for maybe the 10%, 10.5% mortgage loan, or we are not told that we have paid or we have received interest on our investment income, that which is at 15%, and then that's not the beginning. When we go to our cash book, also we had some other financial instruments that we also bought, or in other words, investments and liabilities. When we're doing our cash book, we've also bought, or we've issued debenture, 10% debenture. We also need to account for that interest. And then we purchased also debenture, the 6%. So all of that interest needs to be calculated. And then you just need to pass entries, general entries, to accrue those interest income and then those interest expenses. And then you should then also record that in your general journal as part of your year-end adjustments. That is the other thing that they are trying to include here when they say, and all the necessary adjustments for the current financial period. That will be those interests. So what you will then have to do, looking at the ones that we had at the opening, at the beginning of the year, like for instance, that investment interest at 50%, we do have then to account for that interest income accrued. And then all that you need to know is that when you are recording an interest income accrued, which are the two accounts involved. But before you look at the two accounts, you can already calculate the amount for the whole year, because we had that investment as at the beginning of the year. So that will be for the whole year. Now I will just quickly just go through the how we'll do it for the ones that we had during the year, and then the ones that we have acquired. You can also just calculate the percentages and then see as from when we bought it or we got it, then we just then also calculate those months, and then you have the amount. Now then it will mean, like for instance, for this investment, you will just take 15% times 12,000. That will give you an amount of interest that is accrued for this investment, 1,800. Now what you just do, without looking at anything else, you just record that as interest income accrued. When you are recording interest income accrued, you will know that you will debit your income account. Is that correct? Should you debit your income account, your interest received account?
You credit it, ma'am.
Yes. Thank you. So you're going to credit your interest income account. Then on the other hand, while you are going to debit your 8,200 account, which is other current assets. And then for this one specifically, I did not add that. I need to add that. In other words, it should be a sub account here under sundry customers. The first sub account is prepaid expenses, and then we have the second sub account, staff loans. Now accrued income account is none of the above, so I cannot just select prepaid deferred expenses. It's not even an expense. So, and I'm sure at the beginning of the period we had to already create the appropriate sub accounts for accrued income and then income in advance. I think I have not done it, but you have done it. So I will just have to do that quickly now, meaning that I need to go to add, then I add my accrued income account. The category, other current assets, 8,200, sub account 030. I think we can just create one accrued income account, yes, not to say that interest accrued, because we will just have to have that one accrued account, because we might also have accrued rent income, accrued interest income, and any other accrued income. So that's why I think then for us, we just had to create, or we just need to create one sub account for all our accrued income. Okay, that would be correct. I thought we were specifying, but I don't think it's necessary that we need to specify. So it means that we just come up with one accrued income account. And now whether it's interest or rent, we just choose the same account. No need to create a lot of sub accounts. Now I just have to select it, 8,200, and then we have accrued income. Then the next thing is the accrued interest expense. For our mortgage bond, that's an expense to us. So we also have to have the amount, 9,400 or 94,760 times 10.5. Then I get an amount of 9,939, and the decimal places, as I told you, that it depends on what is the requirement saying, and then you need to adjust accordingly, either to two decimal places or one, or just round off to the whole number. But for in this case, for the class purposes, just round off to the whole number. So we'll need to debit the expense, interest paid. This is now accrued interest expense. When you have an accrued interest expense, you debit the expense account. In this case, I got 9,939. I'll leave out the cents. Now, please, that requirement, it reminds me now when I'm now at this decimal places issues. When you had that requirement to say round off all calculated amounts or all calculations to a nearest whole number, it does not mean that if you get the statement, the bank statement, then you need to round off those amounts. That will not be correct, because you have not calculated those amounts and you are getting that from the bank statement. So most of you are still rounding off those amounts, which is wrong, because you were not the ones who had those figures as calculations. You're just given a figure from the bank that they charge you that much. You don't round it off. It means then you'll be paying more or even less, which is not correct, because it's a third-party amount that you cannot round off. That's why we had to specify that all your calculations, not what you find on the bank statement. I'm sure some of you will know what I'm talking about now here. So accrued interest expense, that will mean that you will have your 9,200 sundry suppliers account. And then for the first sub account, it has accrued accounting audit fee accrual. And then another sub account is now the other accrual. So for all your accruals, accrued expenses, you will just use other accruals. No need to create now another sub account for accrued interest or accrued rent or accrued water electricity. No. You can use the same account, sub account. So that is all what you do. I just showed you the first two, and I'm sure you will do the same now. If you come to your next item, when you are doing your purchases, your cash book transactions, you issued a debenture, so you will still take 10% of that. We have issued this in September. That was in September, so you will accrue the interest for only the 1 month, which is now October. Then you get the figure. So in other words, for this 10% debenture issue, you will do it taking first the amount, getting the amount which is 12,000, 10% of that amount, and then you take that only for 1 month. So that will be 1,000. That is the only interest accrued. So it will just be the same thing that if you come to your general journal, debit expense, same expense account, accrued interest expense, the amount is 1,000. And then if you come to the contra account, it's also the same contra account. I said you don't have to create a lot of sub accounts. So when I'm going to mark, I will have those amounts. I will be looking for those amounts in that account, which is now the accrual account. Another account that we had to also account for the interest, I think it was a debenture purchased, which is an investment. So it's interest income. So this 6% debenture purchased, you will also accrue the interest. And then in this case, it is interest income to be credited, accrued interest income. What did I do now? I just messed up here now. I did not, doesn't want to delete. But anyway, I can just highlight and type in the correct word. I think I just pressed too much on my keyboard. Okay, now if I would have to first get the amount, it will be 20,000 times the 6%. Now, that should have been interest for the whole year, but we bought this investment only in September. So that will be only 1 month. First of all, we'll get the amount, 20,000 times 6%.
$12,000.
What is the amount?
1,200.
1,200. Only for 1 month?
$100.
Thank you. So we credit our interest income or interest received. Then we need to debit our 8,200 account accrued income. So those are the easy marks that please do not miss out, especially when you come to the phase 3, and the final assessment. Do not leave out those easy marks. Now, according to what we have done so far, it would mean that we are done with our year-end adjustments, but you can also still go through and check yourselves. But the most important thing is just to complete what you do after we're done with your adjustments. You update your report, your batches. So I can start with the general journal, then I'll just update this batch, and then go back to my cash book processing, because I am sure also when I was doing my year-end adjustments, I did process in my cash books. So I'll go to my cash books and look at where did I process anything. So in the current account, I had some payments. If I go to the receipts, I had nothing. And if I go to my cash account, did I process anything? Nothing. So I'll just update my current account. So you come to update payments. Then you're just ready to view the detailed ledger, because here it says that process the above transactions in the appropriate books in period 12, update all batches, and upload the following reports. That will be now as if it's now for your third assessment or final assessment. A detailed ledger for period 1 to 12. The periods are so important that you need to take note what is the required period. So, and then also it says now the supplier and customer detailed ledgers for period 1 to 12. So if I come to the system, I'll go to view general ledger, then I go to transactions, then I come to detailed ledger. And that is also one thing that I was looking at when I was doing when I was making your second assessment. Most, or not say most, a few students do not pay attention to the report required. I don't know whether you don't read what is required or you just want to issue the report that you like marked. Because you must make sure that you issue the correct report so that you get it marked. Otherwise, if it's the wrong report, because some of you were already uploading the detailed ledger, I don't know from where. Maybe you have done the course previously, but then if you've done the course maybe in previous years, you would have known when do you extract a detailed ledger, when it is required. Otherwise, if it's not required, do not extract it. So for a detailed ledger, which is normally required when we have done adjustments, you go to view general ledger, transactions, and you select detailed ledger. When you come to the selection screen, it must first it must be on screen, and then you just make sure that you change the periods. Please never change the accounts. You just change the period. It must be from period 1 as it is to period 12. Normally it will be the whole financial year. Then you leave everything else as it is. Then you just click on OK. And normally it will depend on the transactions. This is the most report which has a lot of pages. Like now, this one says 10 pages. It all depends on the transactions which had to be captured for the whole year. So that is what is going to be marked normally, just this detailed ledger. And from this detailed ledger, we will see, if I go to next page, what have you captured? And if I see that it is sales and this, I will know that you have done this in your, as being part of your issuing of your invoices. And when it comes to the depreciation, firstly, we also have bank charges that will be appearing that side. And then if I go to my depreciation, this is what I want to see. It has description as to which depreciation amount you are calculating. Then I will know which one now you are answering. Otherwise, if it's just depreciation here without knowing Because normally I would have also verified the account, the contra account, which asset did you choose, but that will mean that if you have a wrong asset account here and then you've got the correct amount, you will get no marks. But normally what we are doing at the depreciation, we just at least look at the marks to be correct. So you should have the correct asset, but basically the correct amount as well. That is very important. The amount must be correct. Okay, so that's all that you have to first maybe look at it before you save it, and then you upload it as part of the required reports. Now, the other ledgers, you know already how to extract them. View customer, date ledger, always by customer, and then period 1 to 12. So then that's your document that you will also update, upload or print out. Because for the third assessment, you are still uploading. So you will save this report, you know already about it, and then upload or print. It depends on where you are. For the supplier dated ledger also, it will show everything now, including adjustments, whatever you have adjusted and whatever was the payments and all the issuing of the invoices and credit notes. It will normally show everything here. Okay, so that is all that you would have captured when it comes to the year-end adjustments. Just to recap, year-end adjustments comprises of depreciation, accruals, payments, provisions, allowances, and corrections of errors. So therefore, you won't have to say that you have maybe revised on all the aspects, because correction of errors, it depends on what is the error. Then as an accountant, you will know how to correct it. Depreciation, you know what is the policy that that needs to be used to apply to certain class of assets. Accruals and prepayments, you also know how to come up with that, and the allowances, as just like you do in financial accounting. So what we only had to go through on the system is just how to record that now on the system, because we don't have to come up with a lot of accounts. We only use the accounts that we have on the chart of account for that company. Now, in summary of the year-end adjustments, those are the aspects that you need to take note. First of all, not all amounts will be appearing on the adjustments. You need to calculate amounts depending on the adjustment. Because sometimes we tend to think that the system has all the solutions. No. Us, ourselves, the users of the system, are the ones with the solutions or the amounts that we need to capture. So make sure that you always first identify whether the amount is already given in that transaction or you need to calculate. Thereafter, you will need to determine this transaction. Should I record this in the cash book or general journal? What will guide you is that whenever you see that this transaction, there was a payment done, EFT transfer, then you will have to record that transaction automatically in the cash book. But where you see that it's just provisions, sometimes could also be a provision for you get the amount for dividends, and then also for taxation. I will just quickly show you the two that if you get an adjustment which speaks to dividends proposed or declared, because for financial accounting, there's two ways how to treat it. If it's proposed and if it's declared, I'll ask you now afterwards. Then you need to then determine then the particular transaction. If it's not paid, then it will either be a non-cash transaction or it is not paid. All unpaid or non-cash transactions needs to be recorded in the general journal. Determining all this needs your financial accounting knowledge. You need to revise on that. And then basically your settings are very important. Before you do your year-end adjustments, you need to make sure that you have done the settings which are necessary to allow you to do the year-end adjustments. And that specific setting that I'm talking about is removing the contra account. You know, at the beginning of the period, when you were recording your opening balances, you had set the suspense account to be your contra account. You need to remove that when you're doing your year-end adjustments. And then now you will start capturing your adjustments, finding your own two accounts involved in a particular transaction. So I hope that part is clear. Okay, I was just talking about two aspects here that normally are also part of the adjustments. Your dividends and your taxations. Now, if you have your dividends from your financial accounting knowledge, if you are told that dividends is proposed, and then you are given the amount or you are given ways how to calculate it, how do you record it manually? Does someone want to say something? I'm just hearing sounds of the background or sounds from the background, but no voice. I'm asking from your manual accounting, if there's a transaction which says dividends proposed of 10,000, what do you do?
You record it as dividends declared.
So dividends declared and dividends proposed, it has same financial implications or recording. You pass the same entries, in other words.
I would suppose so, ma'am.
Okay, anyone else? So then why are they using two words, proposed and declared? If it's just the same thing. I think you need to find out from your financial accounting lecturer when dividends is proposed and then when dividends is declared. Because the other aspect could be when dividend is paid, isn't it?
Yes, ma'am.
So it means that if it's proposed and declared, they said it's proposed and then declared, that would be the same transaction because then it means that it is proposed and then it is declared and then you must record it and then you raise a liability. But if it's just proposed, do you do something? Do you record it? That's my question. Just go and find out. Now, in this case, I'll give you an example of dividends declared and then dividends paid. So now if it's just declared, it's a liability that you will raise. And then on the system, you will come and look for dividends declared or paid, be debited. $10,000. Then the contra account on the system we do have a dividends payable account as a liability, other current liability, because it is just declared without being paid. Then that's the entity that you pass in the general journal. And then also for your income tax or normal, it's income tax, you will just see whether it is paid or it is still payable. If it's payable, you still come to your general journal, and then you select normal taxation account. Please not deferred tax. Do not select anything which has to do with deferred tax. Income tax, it will normally say that income for the year was determined to be this, and it will be paid maybe in the next financial period. Then you know that this normal income tax that we need to have paid, but we have not paid, so we need to raise a liability. So you will debit your normal taxation account, and then the description will just say income tax, and then maybe the amount is 15,000. Normally for income tax amount, you don't compute. You should be given how much that was for that financial year. Then we do have an account for payable, taxation payable. That is when you use now, if it's now for income tax. But I see that some of you were still using this for the pay as you earn. Pay as you earn is not taxation income, taxation expense. Pay as you earn, you had to use the salary control account because these are third-party payments. It's not for the company. It's on behalf of the employees. So there's no way that you will use taxation payable for pay as you earn. So that is when dividends is just declared and it's not paid. That's how then you will record it. Now, if it is now paid, both transaction, maybe income tax paid for the year 15,000 or dividends paid for the year 10,000. You do not use the general journal now because it is paid. What you need to do, you need to go to your cash book. Because in other words, or let me just first remove that, because for the company it will not have the same situation. Either it is paid or not paid. So in other words, if it's now paid, I should have not recorded in the general journal. So I can just remove these lines. I will just delete, because now we have paid. So we should have just processed straightforward in the cash book, payment screen, normally from the current account. And then you select now for dividends paid, you will still select that same account which says dividends declared or paid, because the contra account will be now the bank, the account to be credited. And then you will just say dividends paid. That amount was 10,000. I'm just coming up with an amount, but in a question you will be told the amount, or you will be told maybe it's 25 cents per share. Then you need to calculate the amount of shares. Let me just see from our document, what did we have as information here? Our ordinary share capital. Okay, so maybe you would have then determined then or given an amount as to how much was it per share, and then you will take that maybe 25 cents times the number of shares that were issued. So you will know how to calculate the figures, because from financial accounting you know that. So I was just showing you now on the system how you will go about it. And then for income tax, you will also come at the account here, and then you select the normal taxation account. And then here you will just say now income tax paid. And then that amount was 15,000. So that is how you will just record this two normal transactions or adjustments, which normally also form part of adjustments that we did not have here, but we might come across that. Okay. Any questions so far on what I've been explaining? Okay, if there's no questions, let me just quickly go through test 2. I'll just highlight some of the aspects shortly. Can you hear me?
Yes, ma'am. Yes, ma'am.
Okay. Okay, let me just open the test question paper document just quickly. Then I'll speak about what I see, what that I need to maybe talk about quickly.
Can ma'am also please post the memo online when you're done?
It's already on e-learning, my dear.
Okay, ma'am.
As we speak, okay. So that is where now you can take your reports, because right now I've already placed your answer scripts for test 2 in the lab, because there were some of you who have requested me to open the lab for starting tomorrow. So I will open the lab tomorrow at 8 o'clock, and then your scripts are already there for collection. Then you can take your scripts, compare that with the suggested solution, and then you will see if there's anything that needs to be corrected. Please, I would like you to, first of all, you would have had to know which amount or which account was not marked. Then when you are sending a query email, I would like you to attach also your reports, the soft copy that you have emailed, just to have it easier, because right now, if I give you back your script, how will I get it back from you? And unless from, you can just forward me the unmarked or the original reports via email again, and then you specify how did you submit those reports initially. Did you upload them or did you send them through email? Then I just verify that these were reports that I've already received, and then I'll remark. And then you just specify that maybe at the cash book, you have not marked account A, B, and C. At the trial balance, there's something missing, 1 mark missing or 2 mark missing on this account. Then I will just first accumulate all those issues. Then I'll walk over that over the weekend. I can go through all those issues and then correct those marks by Monday, at least, because I can't do it for one person and then go through the whole process. I can do it once and then change the marks at once on ITS. I hope that part is clear. So where you see that you also got more marks, please inform me. Then I'll remove the marks. Is that possible? Will you do that? Okay, I think what will always set you free, or one free, is that you should always make sure that as accountants, as you know, that we should be honest. And so we need to make sure that wherever something is also wrong, you mention it at the beginning, because you never know where someone might pick it up. And then by that time, then you will be already regarded as being not honest. But just try to, if you see something, please report it, whether it's good or bad. Whether your marks are more than it should have been, or when they are less, both situations you need to report. Okay, now I just want to bring this to your attention, because I see that most of you are not getting it. When it comes to the sales returns and purchase returns, really, these are just, in other words, you will not find such accounts on the system just because businesses are not in the business of returning goods. You do not anticipate sales to be returned, because it means that you should have issued the correct quantity and the correct type of inventory item. So those two accounts are not on the system. What you could have done is just to record it against sales, for instance, on the opposite side, and then purchases also, and then you record that on the opposite side, so that you just have net figures. But I saw some of you were creating sub accounts on sales, but then it means you need to create now 2 sub accounts. The one where you will record the mark, the sales figure, and then another sub account while you record now the sales returns. That can also be correct. Or else, as I said, the shortcut is just to record it on the opposite side. If it's sales returns, you select sales and then you record on the debit side. If it's purchase return, you select purchases and then you record it on the debit side. Is that correct? Credit side of purchases. Okay, then another thing is that when you come to this part, I saw that most of you could not get it. Now, the accumulated profit and loss. Now, this account had a question mark specifically, so it means that you had to find a figure also for accumulated, either to be a loss or a profit. Now, the way that you can do it is just that because this is just a list of balances, and a list of balances will just mean that when you have a list of balances, and then you are required to draw up a trial balance, extract a trial balance. It will just mean that you will have these accounts put recorded, and then whatever is remaining in the expense account, after even also including your depreciation of your non-current assets, you will just clear the suspense account to your profit and loss account. So that is how you were supposed to have done that. Now that will mean that you will do your first opening balance batch, including your cash book processing, recording your opening balance for the cash on hand, which is now the cash account cash book, and then cash at bank, which is your current account cash book. You record those two amounts, you update. You go to the general, you record all these accounts, you calculate all your depreciation for your non-current assets, you update that general. Then you extract your trial balance to see whether you will have now an amount lying at your suspense account. I cannot show this because I've already updated my batches, unfortunately, because I had to do that because we had to compile the solution. So in your situation, you will know what I'm talking about. Once you update your batch for your general, your opening balance batch, general, you will extract a trial balance. When you're extracting a trial balance, you know that there's an amount on the suspense account. Let me just show you for maybe the class company. Let me just show you what I'm talking about now, but you will know because you would have also done this. Now, the trial balance would have been for the first period. So you will update all your batches, and then you see the amount in a suspense account. The suspense account should not have an amount, especially when you have now this question mark. In this case, at the beginning of the year, when we had our opening balances, just to give an example, all the accounts were appearing, meaning that you had all the class of accounts like your assets, liabilities, and also your equity accounts. So there was no need for you to clear your suspense account, or you're not asked in terms of giving a question mark that you must find out what is now your accumulated loss or income account. But now in that case, it means here, that is why we have not cleared our suspense account. Doesn't matter. We are given those accounts, and then we have to capture that, and then whatever remains in the suspense account, it remains. Now, the difference in this first test, second test is that now you had to calculate because there's question mark. So if it was the test situation, now you get that figure, suspense account having a credit balance of, in this case, 72,018, you clear the suspense account. So you go back to the general, and then you pass now the entry to clear it to the profit and loss account, which is the retained earnings account. Now, so you will get that figure, and then you come to your general. That would have been period 1. I'm just giving an example now. So that amount was on the credit side. So you will come and select your retained earning account. This must be on the first. That would still be opening balance. for retained earnings? Now, we will have to determine, in order for you to clear the suspense account, should I debit or credit the retained earnings account? What do you think? It means you will credit your retained earnings account because you need to debit your suspense account to clear your suspense account. Clear your suspense account means that you just get rid of it and then you have your amounts appearing on the retained earnings account. If I just update this, because I'm just showing you, and it's a class company, I can practice with this. So let me just get the amount correct. It was 72. Let me just verify that amount. 72 and 18, that's the suspense account. So now you need to clear this to your retained earnings. I saw that we did not have it also at the beginning of the period, or I have not captured it. Let me just see, did we not have it or I just omitted it? Just check with our class company. I don't think we had it. So in that case, it would have been appeared here with question marks if we had to come up with it. But it was not asked, so we had to continue without it. So that is when in the test, only once you see a question mark, it means now you are required to calculate what was the retained earnings amount. So now when I saw that on the trial balance, that the suspense account, when I was recording my opening balance in period 1, because it's period 1, it would have mean that I'm now doing my opening balance batch, and then I did calculate my depreciation amount as well. So I will come and clear the suspense account, where I will now debit the suspense account and credit the retained earnings account. So that is what I've done here. I did select retained earnings account and I did credit. Let me just have the correct amount. 720118. And then if I just preview this line quickly, it is showing me that my suspense account will be debited and my retained earnings account will be credited, which is correct because I want to clear my suspense account and come up with my retained earnings opening balance amount. So if I view my trial balance for the first period, I should not have a suspense account amount. There, I don't have it, but I came up with my retained earnings account. So that is where in your test 2, you will find that there is an amount now for retained earnings. That is what I've done. You have captured your opening balances, and then you see that there's an amount in the suspense account, and then you just clear it based on so that you are having 0 amount on your suspense account. In this case, it turned up to be an income, but it might also be a loss. You will find that now you need to debit your retained earnings account. It depends on what the suspense account balance is. That is one aspect on the test 2. Another one that was also giving problems, I don't know why, with the cash book. Maybe most of you, even though, okay, you don't have, you have posted all this on the, I don't think on the 30th, I mean on the 30th, yes, I don't think, I'm not to say I don't think, you have processed all this on the 30th, but the most important that you had to do, you had to come up with references. The reference should have incremental references so that each transaction to be on its own. And then when you do your bank recon, it does not consolidate the amounts. Because I saw some of you, you just have one entry, consolidated amounts. I don't know Why is that so? Because you had to have the references for each and every transaction, and then so that your amounts will not be consolidated. So that is one aspect about test 2. And then where you see that in this case, for instance, you have your cash deposited, it means that we did have an amount that we have recorded in our cash book, cash account. And normally this was the same amount that one would say is the opening balance, cash on hand, which was now deposited. Cash on hand, 3,500. Our statement says cash deposited. So you would have recorded this in the cash account, cash book, and then you transfer that to your current account. So we needed to see that as well. Where there was also another item when it comes to the anonymous cash deposit, this one. It is cash. Anonymous means you don't know about this cash. So some of you were already treating this as revenue. How is that possible? Anonymous means that it is no one's cash. You just saw it on your bank statement, which might not be yours. So that is where you had to record it in the current account cash book under suspense, because you don't know what is this cash. You are told that it's unknown. Anonymous just means unknown cash deposit. So you will see in your solution that that is maybe where you went wrong, where you can see that there's no marks. And then there was also another one that was just also a common issue. Now, internet transfers fee, that is a bank charge. Is not as, it will not be the same thing as internet connection fees, because here you are having the connection fees where you have now telephone lines and so on. This can be telephone and fax, but this one is just bank charges, because that is your transfers. And what else also? Now, Hilton Hotel 2 weeks training course. It is telling you that it is a training course to Mr. Hope. Mr. Hope is then a staff member, so this will be training, a staff training course, not hotel and accommodation. You are told it's training. So most of you are just using hotel and travel and accommodation, which is wrong, because it specified that it's a course, that it's 2 weeks training course for Mr. Hope. Membership fees, that's just as subscriptions. What else? Ordinary share, this one could record it 2 ways, either as in ordinary share capital or shares in subsidiary. We're even allowing that. And then cash sales, it is telling you that it is cash sales. So you would have recorded this in your cash account cash book, and then you transfer to your current account, because now you're only seeing this at the bank once you have now your statement. So you first had to record in the cash account cash book, and then you transfer to the current account cash book. Because we went through this when we were recording our cash book transactions. So if there's anything else, now also Social Security levy, that will just mean that is your salary and wages control account. These are third-party payments. It does not mean that it is levies for the company. The company doesn't pay any Social Security. It just pays on behalf of the employees. So that's why, just like as pay as you earn also, receiver of revenue pay as you earn, this is not the company income tax. That will be wrong. It will be salary control, salary and wages control, because it is third-party payments. And we have mentioned this during class sessions. What I only saw is that also most of you are not listening to these lectures, not in full, because this carriage inwards, I have brought it again. In the test 1, it was already appearing, and then you had to check which account was used. If you are still getting it wrong in test 2, it means you have not even revised test 1, you have not even revised your class work, then how will you expect it to get it correct in your test 2? So that is why I'm picking up that not all of you are listening to all these lectures. If you are listening to all those lectures and then you really got this one wrong, then something must still be wrong. You need to inform me how was that possible, and you must be honest to yourself. But all that said, it is still all up to you to take it up to you that you revise and then you make sure that you capture all this in your test 3, or whatever you went through for test 1 and test 2 must not be now mistakes again in test 3. And you must use the time, because that's why I made it so that computerized accounting for the Friday's class, you come to campus. That is where the others are also free to listen to the lectures for computerized accounting. So there's no excuse apart from you yourself now managing your time, maybe the other way, that you leave out what needs to be done now and then you don't do it later as well. So that is all that I had to say. And then you just need to go through your test 1, test 2, when you're preparing for your test 3. I've spoken a lot now, but it was very important just to remind you and get you to prepare very well